portfolio. So that this is something personal to me. I'll give some spend some 5 minutes on it if you want to tell what to do in every case, but mainly chart movements. Second, I'll also be showing how to build a trading system from scratch, like how to go about starting a trading system and how to actually execute it for future reasons, future occurrence of that, and how to measure its success is the fourth point, as I said. So how to measure the success, what kind of capital you need to put in this trading system for it to become positive in nature, what kind of time frame, and how to revise trading systems as they go ahead. This will be interactive. If at any point you're feeling lost or is okay, Ice, is everyone on auto mute or like they can unmute themselves?
Yeah, we can
We can unmute ourselves.
Great. So, if I'm moving too fast or if there's any doubt, please stop me then and there. We can clarify and then we can move ahead. Because as we go ahead, after this theory part ends, there'll be some numbers thrown around. So, if you're feeling lost anywhere, we can always take a step back and go ahead. So, starting on. So, where does intraday fit into your bucket in general? So, currently for me, I will only be doing 15% of my whole portfolio as intraday portfolio. So, that's my capital actually. So which is basically I believe the right amount, because intraday is where you can expect your maximum losses to occur. Like it's very hard to break even, let alone be in profit for a lot of people. So you're already spending so much time on it. So I don't believe you should be doing intraday with almost all your capital. You should have at least some amount of fallback. And this is a personal system that I follow. So long term will be around 50% of my portfolio or my capital. Swing trading will be around 35% and 15% will be intraday. And all profits that I make will be moving from left to right. So if I make any profit in intraday, that will be moving to swing trading. If the profits from there will be going locking into long term. And how that changes is basically what this helps is in basically this asset movement, which will make you consolidate your intraday tradings into not losing them into one shot. So this is how you avoid blowing your account if you want to be an active intraday trader as well as make profit over the long term. Just doing intraday with all your capital will probably end up in one day where you'll be sitting with an empty account, because in the end you cannot predict what will happen intraday, right? Long term, there's a lot of sense in investing because you have fundamentals to work with. But intraday doesn't care about fundamentals. Intraday won't care about your PE ratios of company. It won't care about how the economy is doing. It'll just care about market sentiment. So if people think like COVID is going to destroy the world, market will fall. So no matter what. So summing up what intraday trading is for me, don't use more than 10 to 15% of your total capital. It's your first step into asset movement system, which I use here. Second, the third point is actually, which is basically how to get the intraday mentality, is to see, is what I do is I'll be seeing my swing mentality and then applying that to intraday. And similarly, my swing mentality will be affected by the long-term mentality. Now, let me explain that with an example. So, for example, let's say I'm really happy with Reliance. I analyze fundamentals. I have seen the company's history, and I really think that Reliance, even though like it is at 2,300 now, it is like really undervalued for the next 10 years. So what I'll be doing here is, so let's say I make a long-term investment in Reliance for in the goal of 5 to 10 years. So my swing strategies there will be based on Reliance only, because I have already analyzed Reliance so much. I just need to take advantage of the mid-level fluctuations that Reliance will have for my long term and take advantage of that. So most of my swing plays will be going into Reliance as a bullish side, not as a short side. So whenever I think Reliance is down for a while, which I think, okay, this is a normal hiccup, I know it's going to rise, I will be taking a swing position for 3 to 4 months and then sell that, because that's a separate part of my process. Same way, those swing mentality will be affecting my intraday mentality, and I won't be taking against those any trades against those swing mentality. So if I think that the market in the next 3 months is gonna be very bullish, I won't be taking short trades on intraday, no matter how Okay, I heard some song. Yeah, so I no matter how much how much of an opportunity comes for a short trade, if my 3 month view on my swing trading is bullish, I will not be taking a short trade on my intraday trades. What this does is actually this is a way to avoid pitfalls actually. So if going by this mentality, you will never do a trade that you think is right, but it is not. You will never go against the flow, right? Which even though like no matter how much convinced you are, and again as intraday comes, you need to be in the flow as much as possible. So and last, so even though it's called intraday, for me, I see anything under a week as intraday. That is, most of my strategies also will be under a day only, but some of them will go for 2-3 days, and those also I don't see a difference there. So anything under a week, you can actually count it as intraday. So coming to what to prioritize for intraday trading. Now this is just a graph I made in 2 minutes just to explain my point in a faster way. So for any security out there, the time in market you spend in that security, invested in that security, the more the fundamentals matter and less the market sentiment matters. So for example, again, coming to Reliance, a good company, if you're investing for 10 years, you're analyzing everything, then if you're spending 10 years, fundamentals matter the most. But if you bought Reliance on 11th of March, then no one of last 2020, then nobody can help you if you bought it for 20 days timeline, because your time in market was so short that market decided that COVID is gonna rule all, make it go into loss. So this is actually not my original graph. I read in a book somewhere, and I really relate to it. This is what started my intraday journey actually to play around with market sentiment. So this is what we're going to be basing everything we're going to be doing later. Also, one more thing, I forgot to introduce myself before I start this session. So I'll just give some background about myself before going ahead. Otherwise, it will become hard for you guys to understand what is going on. So I've been a trader for in the market for around 9 years, of which 4 years have been in intraday trading. As of last year, I have started transitioning into algo trading, and that is primarily because my systems were getting a bit complex and I could not keep up with them. So as of now, I'll be doing intraday algo with swing and long-term investing, compromising the other part of my whole trading life cycle. So going ahead, how to build systems around sentiment. So
Okay,
yeah,
hello. I just had
yeah,
a question on the swing trading thing.
sure, go ahead.
Uh, so right now, let's say that a stock you mentioned about Reliance itself. So let's
Yeah.
say the stock has fallen to 30, fallen down by 20%. Okay,
Hmm.
and now you decided. So how do you decide that if this particular investment, let's say you have 50,000 now, so how
Hmm.
do you decide if this should be for swing trading or for long-term investment?
Yeah, so that will depend. Okay, so that will depend on how I arrive at that trade, whether I want to take that trade or not. Okay, so intraday trading, I won't be doing based on my intuition, like whether I should do this or not. I'll be doing this based on my systems, which I'll explain later. Okay, so if that system says this is a good point to invest with 90% probability, and if I have intraday capital to spare, I that trigger and the trigger comes, I'll put it into intraday. For swing, I will be analyzing differently. So for stocks that I care about, I will already have a list. So that okay, if Reliance dips to this level, this is a good target for my for the next 4 week. Or so with swing also, it's not just about targets for me. So with swing, I will also be trying to capture small time fluctuations. How do I say that? Is like, for example, an earning report is coming out. Now I know that a good earning, like let's say earning report comes out in positive, but the market was expecting like an ultra good result. Okay, so the market will actually go down for the next 2 to 4 weeks in that case. But in the long term, that report is actually going to carry the stock up. So my swing trading will be based pretty much on that particular time, whether the entry is PI based or intuition based. But if my intraday is giving a trigger, then in that case, I will go for intraday. So to answer your questions, it's not like I will decide intraday or swing based on my systems already there. If both are valid, I will go for both. If one is valid, I'll go for that. So it's more of a procedure. I try to convert everything into a procedure rather than a decision at that moment, because that kills that makes me keeps me disciplined. That kills the random factor out of it. So to be profitable in long term, I really believe discipline is the best way. If you're actually like currently what you're doing right now is making you like let's say 60% profit. If you keep that same thing up eventually you're gonna get 60% is more than 50%. So you're gonna be making capital. Over time, you can refine that system. You can take 60 to 65 to 70, but it's not needed that like you can take it to 60 to 65 to 70, but you don't need to take big risks there. So same way for me, I will never intuitively think whether I should put this capital here or not. If I see an opportunity, I will just allocate some part of the capital. So from 15%, maybe I'll keep 10% invested, 5% floating in case I have some open system. Sometimes 15% will be invested. So these are rough numbers. So they will fluctuate 5 to 10% up and down here and there. Okay.
Yeah. Thanks, man. Yeah, thank you.
Yeah. So moving on. Now, how to build systems around sentiment. So sentiment is a hard thing to track. And what do we mean by sentiment here? So sentiment is basically the collective behavior of people in general, people, market, everything that is participating in this, in trading securities, trading multiple stocks. How are they behaving, and how is one side affecting the other? And in this case, I mean like bulls and bears in general. You can classify them. So there are multiple ways to do that. The first thing first, your best help will be your previous market data. So the recent, the better. The older it gets, the more it doesn't the more outdated it gets. But it's still helpful to verify your probability numbers. But the more recent, the better, because human memory is very fragile, right? They will know what will happen 6 months back, 2 years back, 5 years back, but they won't remember what will happen 10 years back easily. So, for example, if I tell name one incident before 2013 that had a huge impact on market, everybody will just remember the housing crisis. But there were other crashes too. So in between 2010 and 2020, there were at least 4 to 5 crashes. Even for example, mid-level stock, the mid-stock crisis of 2016 was one of the crises that still affects, which went on for 2 years, where all the mid-level stocks were crashing. Like basically, Nifty Next 100 was crashing, even though Nifty 50 was doing fine. So that I can remember about 5 years back, but 10 years back, not much. So this kind of plays out overall. So previous market data comes there. Repeating incidents also help, because let's say if there are big events that define our market, if something like that happens again, then you can obviously utilize them. And the last thing is that you can use indicators that reflect market momentum. So some of them are like RSI, which reflects market momentum. You can use support and resistances. I still believe, even though the most simplest form of indicators are one of the the best, your best bet when it comes to predicting directions. I also believe that if you're trading around sentiment, you should avoid trading on days when there is big news. So let's say if a stock is getting a report, or you're trading on the day of budget, you should actually be avoiding intraday on these days. And if you want to capture them, you should capture them on a longer time frame, like swing. So that way you can limit your losses. But intraday on these days can just go south on you too fast. But fortunately, these are less compared to the normal days that you trade. So this doesn't affect much, but this is something you need to keep in your mind. And second is limiting yourself to few securities, and preferably indexes in Indian market. Since if you actually go for intraday trading in stock markets in India, either the fees will eat you or manipulation will eat you, because options are not very liquid in India when it comes to stocks. So preferably indexes, limit yourself to few securities is what I advise there. Any doubts till now as to like what mentality we are heading into when we're going for building a system? Like this is not something that you should be doing with all. I really stress this. Don't do this with all your capital, because since this requires a lot of work, and if you actually end up in loss after building trading system, that can be very hard on people. That's how people quit trading also, because a lot of people will say like intraday is very hard. You can never make money intraday. It's primarily because of two things: no organization and no discipline. So if you're doing this, but I'll still advise even on doing all this, you can still go south. So always, if you're doing intraday, do it with less than at max 20% of your capital, not more than that. So coming into trading systems now, what are trading systems in general? From here, we will start looking at numbers a little bit, and I will describe a scenario, and we'll try to build a very simple trading system right now. And after the session, I will share more trading systems that I've used in the past, which are much more complex than this one, but you can try and relate the same concepts there. As we go into this, I also want you to tell that don't focus too much on the system we're building, but try to think on the way we are arriving at the system, like what kind of thinking we have to do in order to arrive at a probability number, or what to do, what kind of areas to look into, what is the time frame for back testing that we need, and all that. So for our system is basically I see it in three phases. So a trading system is something that you have identified is an occurrence of a sentiment which results in a similar result most of the time. So for me, that most of the time stands at actually 80% probability. So if that system occurs with 80% probability is something I will actively trade. If it occurs with 65% to 70% probability, I will try to improve on it and I will try to virtually trade it. Maybe because it might work in the future markets, it might have not been working on the past markets. And if it is less than 60%, you might actually be better off making a new system. So a system is basically three parts. The first one is a premise. The premise basically defines when your system is gonna be in play. What that means is not every time every system will be active. So you need to have an identification which will be basically okay. Now I know that when this occurs, my system has a chance of executing here. Second is validation, which is basically in layman terms your entry point. So if there will be certain set of criterias that you will build, which will make sure that okay, now this all these are satisfied, I need to enter now. So that will be your like entry point. And third is the execution. So execution will be your exit. Now, exit is the hardest part actually for any training system, because even though you can build an entry, exit gets very hard to like time out of a particular point, or you can code it basically. So most of like some of my training systems will have exits, but most of my training systems I will actually exit on my own. But if you can build an exit into your training system, that's very great, because then you can automate the whole thing out of it. So let's start with the training system. So the example I chose for this one is a pretty simple one. So for example, my view for 2022 is that I expect the market to be much more choppier than it was in 2021. That is primarily because we've been on a bull run for a while, so we have already seen signs of slowing down. But I still think the market is still not in a proper bear run as of now. We still will see a lot of highs and lows simultaneously, and one term for it I think is choppy. So whenever there's a choppy market around, what you see is a lot of in swing trading. I'll be focusing a lot on selling low and buying low and selling high. And the same way, my intraday, I will try to replicate the days when the market is either uptrending or downtrending based on it. So uh, what happens most in a choppy market is gap ups and gap downs, because there'll be a lot of reversals in a choppy market compared to a trending market, and that results in a multiple amount of gap ups and gap downs that can occur. So I let's say I decide to build a system to capture gap ups as they occur, and a gap up that I can trade, that I can enter on the day, basically, which I can guarantee that the day will end in green. So that's my overall play. So my premise will be I want to basically build a system around the premise that there's a gap up today. What am I supposed to do? Okay, so the first thing you do while building a system is you first do some manual calculations. You see, you just try to observe patterns. You see, okay, you break that down to simple things. What was the gap? What it opened? So similarly for the same, I have collected for the last 5 gap ups some data here. You can I did it beforehand because we only had 1.5 hours. I thought of doing it on the session, but uh, that would have taken some amount of time. So I've from December till today, I have taken 5 gap up days, and you can see here we have last day close, we have open, we have first candle high, and then we have day result, and we have day high. Okay, so some of these day high was achieved in between. Some of these day high was closing high also. So you can ignore the last column for now. But if you see here, all of these days ended in green. So now we'll try to build a strategy around this. So the first step is you have to focus on start with the basics. Okay, so now we are trading gap ups. So what we'll be doing first is I'll look into basic indicators. So I'll try basic indicators for this. I tried MACD, I tried a multiple amount of indicators till I narrow it down to RSI. To be honest, RSI was the second one I tried. So because RSI is a very basic uh, indicator, but you have to first get have a list of indicators that you trust in, which are very basic, not very complex. Don't go for Ichimoku cloud or anything at the start. for every kind of system you want to track. So for example, for this I want to track RSI, and these are RSI values just before the open. So if we actually classify these RSI values, you will see that for like 2 days when RSI was low and there was a gap up, 2 by 2 the day ended on a very high note, and that was also the day it ended also at that high. I'll actually mark it here. I forgot to mark it in the Excel sheet. So this was one of the days when it ended on that high, and this was another day when it ended on that high. This one, like the high matched the first candle high. The day high matched the ending high. So when RSI was low and there was a gap up, we got 2 out of 2 for these 5 days. Again, these are just manual calculations. We are just doing this to get a feel around of what is happening, to see how market usually reacted in the last few days, so that we can trade the next few days out of it. And the same way when RSI was high, uh, the it all obviously closed green in all 3 days. But we want to see if it closed on that high or did it hit a midday high and then close a little bit lower. So from the data that I have on the chart, so again, I have done some of these calculations before, because if I actually dry run this session and it was getting way too long if I do all calculations here. So you can later verify these on the chart once we are done with the sessions to go through it again. So it ended 1 by 2 times on, okay, maybe I should do this on a notepad instead of Excel. Okay, so let's see. So RSI low with 2 by 2, it ended on a high for the day. And with RSI high and high, this is a relative low and high I mean from the figures that are there. It ended 1 by 2 times on ended on a high, 1 by 3 actually. And the other 2 times it made a midday high and then ended a bit lower but still green. So now a layman strategy here will be like, if RSI is low and like it opens the next day, we can go and buy it. We can go and put a call spread because we expect it to close in green, since we have 5 instances. But that actually won't work, because since these are just 5 instances, now the next step will be to backtest this data actually. So now again, the way we arrived here is basically by running through multiple starting indicators. And when we think that, okay, RSI seems good enough here, we have a good enough split, we can run both on a gap. Then we can go for backtesting this. So currently I use a forked version of backtester for my backtesting. You can also do this manually, because you only have to do for last, my initial one I will only do for last 5 months, 4 to 5 months. So I have the figures for that also as of right now. So if you run the same thing for last 5 months, then you'll be getting, let me just pull the figures here. Okay, so this is what I got when I backtested it for the last 5 months. So if RSI is low, which I defined as less than 55 points for my code, if gap up is minimum 30 points on opening, and close is within 15 points, which is basically within the high, and at high is basically minimum 50 starting point, we are getting 8 out of 12 instances where it ended in the day ended in green. Same way, if RSI is high, which is between 55 to 70%, so not percent, sorry, 55 to 70, gap up is minimum 30 points and close is at a high within 15 points. Only 3 out of 9 instances actually were matching this criteria. And if RSI is high, gap up is minimum 30 points. It closed low but made a high in the day is 5 out of 9. So now these figures seem a bit more true to the fact. Now that we went back a few months, these are much more closer to what uh, we actually expect out of a system like this. Because if you actually calculate the probability now, okay, and yeah, one more thing. So there were also a couple of red incidents. So what I call red incidents is basically when the system doesn't work at all. So uh, they were totally 4, basically, where RSI was anything. Like RSI can be anything. gap up of 30 points, and the day ended in red. Okay, and the four of these instances, one was with low RSI, and three was with high RSI that we have defined in our range. Okay, so of all the instances that classify for our last 5 months of backtesting, these are the results. Now, whenever red incident comes, that means your system is highly incomplete. Okay, because we don't want red incidents at all. If that is happening, that means your system is not actually able to capture any data at all. Like it's catching wrong data also. But let's say for now, if we define our validation to be RSI low and gap up of 30 points, we go long. This will actually come to a probability of 66%. We can calculate it from here. So 10 instances where we are right, 15 instances where we are wrong. So we, if RSI is low, GAO 30 points, and we go long, there's a probability that 66% will make a profit. And on paper, that sounds good. Okay, fine. Like if it's 66%, I do it like 10 times, I will be getting 6 to 7 times of profit, and that's still good enough for me. But that's actually not the case. Because this 66% is actually your number, which is in an idealistic setting where you're thinking not much of it is affecting anything. But actually, for the last 5 months, there might be some days which were news affected, or like you have to give the probability out. So that the variation usually will be around 10 to 15%. So in this case, if it is actually at 66%, it can actually fluctuate between. I like to see it as 51 to 79% of profit. So, and what I care about in these kind of cases is the lower number, which is 51%. Higher number, I don't care. I will always think that my luck is the worst. So for me, I will see this as 51% now, like with that 10 to 15% variation that comes in. And now this strategy again is looking bad because 50% is not at all a good strategy to system to trade over a period of a few months. So we need to go back to the table and refine some of these indicators that we use. So the next thing that I tried for this, which worked. So again, what will happen is I'll go back to the table. I'll see if I can add one more parameter here that can, narrow down my entries, narrow out my validation, so that if I backtest that, I get much more closer results. What that enables, what the way to think about that is, like you need to think of much other defining factors that come with a gap up. So a gap up usually defines strength, but apparently strength is not good enough, as we saw. Like just a gap up is not good enough. Even if RSI is low, even if it is undervalued, and it is coming in a gap up, there are still chances that the market might still go down. So there are some other factors affecting it. We need to narrow it down. So the second indicator that I eventually ended up adding for this is for the 5 days we had, I observed support and resistances. So again, as I said, I will always start with the simplest indicator and try to achieve it that. And if a system starts getting too complex, I will actually end up throwing it out. So right now, when I work it in front of you, I am realizing that a lot of you will be thinking like how am I arriving at all this? But actually, to even build this, it took like 5 to 6 days to arrive at this point, and what you're seeing is the end result here. So even to arrive at that backtesting point with RSI, I had to first narrow down my 5 days, like the days I took it. I will take days, like try to vary the days as much as possible. The 5 days that we chose here, I could have chosen these 3 days also, right? Like 3rd Jan was gap up, but the next 3 days was also gap up. But I didn't choose them because they're too close together. So I thought maybe 5 random incidents to analyze is better than like close together. So all of this is culminating into what you're seeing, which I'm giving you the data for. So now going back, I after a few thinking, I started looking at the supports and resistances for these gap ups, and I realized that like only a few of these actually had good jumps from a good support level. Okay, so for that I'll show here this Excel sheet. So this 3rd Jan one was on a good support, and the 21st December one was on a good support. Yeah. Okay. So what this means is, like I can see that okay, some of these okay, no, I'm so sorry. This is actually the 22nd December one that is on good support. Can I drag it here? I think I can move that. So now that I know that okay, these are low RSI days that had a good support and they both ended on a high, I decided to run a backtest with this. So for me, actually, backtests. If you're doing it manually, it takes time. If you're doing backtesting like me on Lambda functions, it takes money. So I will only run them once in a while. But if you're doing manually, it's the time. So it will take time. So only run backtests if you are like fully sure like this might have some end results, because it's otherwise just time consuming and doesn't get you anywhere. So I ran it again with the same thing, but this time I expanded my criteria, which was basically RSI should be low or high. That again, same thing. Gap up should be minimum 30 point close within 15 points, and high should be a minimum 50 points. And this another thing that I added was that it should be from a good support. It should jump from a previous day should close on a good support. Now, for my systems, I will feed the support like manually. I will decide the supports and feed it into my like coding algorithms so that they can work on them. But actually, advanced systems use some indicators which give support out. I am not yet there. So if someone knows that, they can definitely use automated support and resistances line. But it's much easier to just identify support resistances, feed it into your system, and let them work over it. So you have previous. So again, so previous close should be at a good support. And I also added one more criteria here. Like, so once I started running this backtest, when I was seeing the results, I stopped the backtest actually. And I realized that there's one more criteria I can add, that the first candle that comes, the first 5 minute candle, that should end in green. Why? Because once I started seeing the data for the last few candles gap ups, most of the days when the candle itself ended in red, the days were not really interesting for me to bet on a gap up, because I'm trying to get a try to go long on a gap up. Since my market view is that it'll be choppy if there's a gap up, I don't want to go short on a gap up day. So my trading system mentality right now is that I want to go long on a gap up day. For the same thing, since I observed the trend also, I added that criteria as part of this. So which will be previous close should be at a good support, and first 5 minute candle should be green. So once you backtest with this, I'll the results that came were like this. So for the first case that we saw there at the top, which had 8 out of 12, uh, in this case we got an 8 out of 9. Okay, so for the second case, it was 4 out of 7, and for the third case, it came out to be 5 out of 6. So now these numbers are much more favorable for me. And again, the same cases, by case I mean here. So this is the first case, this is the second case, and this will be the third case. So now we have a strategy forming. Now if we take the same strategy before, RSI low, gap up of 30 points, first candle ends in green, and the last one being previous close was on a good previous close on support, strong support. So and by the way, by strong support, I mean here like basically a line which at least defines at least 2 pullbacks or 2 reversals when it was going down. So at least 3 to 4 points where market has reacted to that. Less than that, just 2 points, just 1 point is just not enough. So that's what we mean by a strong support. Like market has shown a lot of consolidation around that part. So it kind of acts like a sentiment where a lot of people react to the market. So in this case, if we go for this, you will see that the probability for this will be 77%. So now this is a good number, because even in the variation case, this is coming around to be around 61, 62% in my worst case, and in good cases, it is actually reaching 90%. So which will average down to this. So if I get a number like this, I will actually run it for 12 months, and at 12 months, the probability I'm getting it's 79%. So so mostly 12 months, it probability won't change much, but it's good to run it just to be sure. So now that we have these numbers, we can start executing the strategy when this setup repeats. And based on the success, like if it is reaching 80, you don't have to worry much about capital. So actually, capital is pretty separate. I will probably have to take it separately. But for 80% trading systems, you just need to decide on a fixed capital, and like if you repeat the system like 8 to 9 times when it occurs, you will eventually be making a profit in that system. So the next thing I'll do now is I'll code this Lambda function, code this function, upload it to AWS in a Lambda. I'll create a gateway for it, and every time a gap up happens, it will get triggered, and I'll get a notification whether all these criteria are satisfied or not after at 9:20. So if they're satisfied, I can take a long position for the day. So yeah, that can be anything I want. It can be spread. That depends on how you want to trade options. It can be a hedge call or whatever you feel like. So the same thing you can apply for stocks also. Okay, any doubts still here? I think I went through this a bit faster than I thought I would. But any questions till now, or did I lose everybody?
We got you. I think looking for myself.
Okay. So yeah, now the third part of this is execution. Okay. So execution is basically like determining the exit of the strategy. And currently, this strategy does not have an exit. So as I told you, this strategy is something that is in the works. So like for like I would actually take it as a like if you want to build on this strategy more. I'm not using this strategy currently. Something that I came up with to give an example of the mentality that is involved here. And I would encourage you to actually try to get an execution for this as part of a experiment here, and try to come back to me. We can discuss more about why you think this execution works. What do you think? How you can define the exit? What indicators you can use to define the exit? See the days like which I mentioned here, how they trended. How can you maximize the exit there, and build on that, and come back to me in a few days, and we can discuss more. See, because in the end, this is just a 1 hour session. uh, I can only give so much. I'm trying to condense as much information I can give it to you. But if you want, we can definitely follow up and refine this mentality of making trading systems more. So yeah, that's actually it. I rushed through it pretty fast. Any other questions? Any doubt in general do you have that you want to ask?
So, does the algo places order itself, or you do it yourself manually? They just give the
That will, yeah.
yeah, yeah.
That will depend from algo to algo. So if
Mm,
like how I arrive at a probability here, right? So for probabilities that are above 85 to 90%,
mm,
I will actually automate it to place the order. Okay. But for strategies which are very new, which are like only 65% confidence or 75% confidence, I will
mm.
actually look at it and try to, mostly I'll be placing the order, but I will give it a review once. So most of my strategies that I build or systems that I build, they will never be in a short time frame. Like mostly I'll be taking 1 or 2 intraday trades per day. Less than that, I really believe you're actually going into scalping territory anyways. Okay. So 1 or 2 trades a day means that I have like half an hour to 1 hour in the morning for all my trading systems to execute before I actually jump into a trade. So some of my trading systems actually execute at 12:30. So which is like mid market when Europe opens. So based on both of them, like I will take a decision if the confidence is low. Otherwise, I will automate it and let it go.
Let's see that you make the strategy and you use it for you backtest it on Nifty, and you
Yeah, I
decide it. So
based on whatever index that I made the strategy for.
okay, so then you place for the call options, or you go for call options, or you go for futures, or anything.
I will probably like so most of it is directional, right? So mostly I will make a
Mm,
spread. Okay, so I
okay.
either it will be a
Mm,
call spread or a put spread. I rarely have strategies for low volatility. Okay, so I why because most of the days, like I told you, right, my long-term trading will affect my swing trading, and swing trading will affect my intraday trading. So the view
mm.
for the last 2.5, like two, not 2.5, almost 2 years has been trending markets. So trending markets means why will I make strategies about low volatility? Because volatility is so much, right? So
Yeah.
uh, and yeah, so a life of a system is also there, right? Like let's say you perfect a system, it's not going to be valid forever because markets also change. For example, even a lot of systems went obsolete after 2020 actually, since there's such a huge influx of traders, the volatility increases, the liquidity increases, and suddenly your system's success rate starts going down, and you have to depreciate the system, or you have to make improvements to the system. Mostly for me, I will depreciate a system because if you keep making improvements, the system just keeps getting complex and it just it loses the simplicity. Simplicity is at the core of this. If it gets too complex, it's mostly it's never going to occur again. So basically, if you make a system, it has to occur again, right? So if you like have 10, 15 criteria for it to occur, it'll occur once a year. So what's the point then? Would you can't even collect data about the system. So yeah,
It's better to use less data. Matlab, you can use
yeah.
last one year data is better, but last 10 year data is just useless. It will just ruin the whole purpose
Uh,
of. Yeah,
Come
got
again.
it.
The older the data, right? Yeah, the older the data, the less relevance it plays. Like if you
Yeah,
can
okay.
validate between 1 year, that's best because older than that, I just believe that for intraday it doesn't play that much part. For long term, it plays. Okay, but since you're already focused on a day, right? How much
Mm,
a day will be affected by so many? It can only be affected by so many days before it, right? It can't be affected by a day 5 years before it. So year is also pushing it. That's why most of my I will try to achieve greater than 75 in the last 6 months only, and then I will go for 12 months just as a verification run. But mostly for last 6 months only, I'll try to just achieve that probability percentage.
yeah, got it. Thank you.
Any other questions regarding anything? You can also ask if anyone, if you are interested in algo trading, I can also clear some doubts if are needed there. So I actually have some open source libraries also for some of them are getting released now. I'm going to open source them. So for example, Backtrader is what I use. It's actually made for US markets, but me and my few of my friends, we have forked it in for Indian markets. So once it's open source, I can teach some people here to use it, how to backtest. See, because manual backtesting can get very very hard, especially for strategies like gap up, because there's so many gap ups that occur in Nifty in general. So even in trending markets generally. So uh, that backtrader is there for that. If anybody actually algo trades here,
Looking to.
okay, yeah.
Not.
So
Yeah, not yet,
start,
but interested.
yeah. So actually, trading systems are key to building algo systems because you need to be able to isolate what you're thinking for price action into particular separate functions. So this kind of mentality is actually what you need to code a system out. So
So
yeah.
just a question on the indicators. So for the RSI, what do you use for the overbought and oversold zone? What are the values that you usually keep in the chart?
That I'll have to check. Like, so for example, for this one RSI, I use 14 and 2. Okay. But for my trades, I'll have to check and get back because those are set long back, right? So once they're set, we won't really be touching them for our trading systems. So, but for this example I gave, I use 14 and 2.
Okay, thanks. So you mentioned about I mean, this system is basically set up for the gap ups and gap downs, mainly for the gap
Only
ups,
gap
as you
ups.
mentioned, only
Yeah.
gap ups, yeah. But that doesn't happen often. So what are the other themes or strategies you have in case market opens flat or gap down?
Okay, yeah. So that's what, as I said, gap up is just one of the incidents to capture, right? So another one of my most successful systems that I use is actually based on days that open flat, but in the first 30 minutes, what is the average trading that happens? So that one is actually one of my most profitable system that gives around 90% success right now. Hopefully, it goes on for longer, but scenarios to look for basically is what your question is. So gap up, gap down is one scenario. 30-minute average of the trading is another scenario. How the previous 3 days trend looks is another scenario that I work on. So one of my trading systems that has around 80% again success rate is it will consolidate the last 3 days and try to tell you whether the fourth day will be a similar trend or there might be a reversal today. So these are the kind of things you need to look on. Like basically repeating patterns. Think of what your view of 3 months is, shorten it down to what an intraday will look like for that.
Okay, thanks. So based on your experience, which setup has the maximum hit rate, or say maximum probability of a winning trade? So you mentioned for the gap up, yes, if the RSI is high, then the probability of the market being higher on that particular day is very high. Similarly, for neutral days as well as gap down, are there any such indicators that indicate whether the market would sustain uh, uh, the narrow gap up, or when the market is going down, is there any also setup or indicator that tells us that market will continue to go down on that particular day?
See, that's what there will never be one indicator. What I can share is a list of indicators that I consider for different type of scenarios. As I said, RSI is an indicator I like to use for measuring momentum. So support and resistance is a indicator I like to use for consolidation, to check consolidation in market. That list I will share separately since it's a decent big list, and even I don't remember. Like, so for how I will use that list is, okay, I want to check this, I will refer the list and I'll come here. Okay, so that list I'll share. The second part of your question that I want to answer there is uh, basically how to determine which indicator to use for a particular trading system that you're building. That meant that actually is, it will come with experience. Okay, once you start building systems. So for example, when I started actually focusing on systems, it took me around 6-7 months to actually build a proper system first, which actually made me, like, decent amount of money. But now I'm able to like have around 8 to 9 systems parallelly running, because with time, this is something that will increase with time. So now that I have that dealing of like experience of 2-3 years, I'm able to recognize, okay, now this one looks like RSI will have a hit rate more, I will try RSI first, or this one, okay, I should start with support and resistances. But for the start, you just have to sit down and go one by one and build that experience. Okay, so I will share that list, try to build some systems around it, and as you build more systems, you will see which fits which scenario most. There's no such like god list of for these kind of scenarios this list, but this you can all you can have is like momentum this, consolidation this, trend reversals. You can maybe take some indicator like that. So
Yep, thanks.
anyone else?
Coming to the algo setup, can you describe a bit more about that?
Do you want the technical like specification or architecture? Basically, you want architecture?
Architecture, yes.
Okay, so let me open something. So I'll explain it in a crude way, not with a diagram. I hope that is okay. Okay, with this text, not an architecture diagram. So at this, all my algos are hosted on AWS. On like almost everything is on AWS. So how that will work is basically I have a gateway on AWS, which will be taking requests and deciding what to do with it. Now this gateway will decide what to do with the request, whether to send it to which Lambda function. Okay, does everybody know what is a Lambda function on AWS,
No.
or should I? Okay, so a Lambda function on AWS is basically a serverless code running. So basically, if you give it a piece of code, and if you run it, if you give it a request, it will just run that code without us. Like, it won't tell you to hook a server or anything, and it will just run that request, run that piece of code, and get you the data back. So I use Lambda functions primarily because AWS gives 1 million requests for free per month. So that's like way more than for what I need. And what they will charge for is the data flow. So data flow charges are actually pretty less. I think it's around $0.00004 something per data. So this is the cheapest way to do it instead of getting EC2 buckets. So what will happen here is from a gateway, you will have requests that will be going to Lambda functions. Okay, depending on what I have called, like if I'll be every Lambda function will be linked with a name. As part of this going to this request, before this, the request will be intercepted for any data that is needed, and that particular DB will be initialized. Okay, so I have multiple buckets of data running here. So one is 6 months data bucket. Okay, so these are data that I have scraped from websites before and kept it already in an organized way that I know and I can use for my backtesting. Similarly, I have scraped 12-month data, and currently I'm scraping 24 months data just for the fun of it, like, just for learning purposes and seeing how to handle it. But yeah, so once a Lambda function is executing here, before it executes, it'll request for the data that is needed from its bucket. It'll get, once it gets that data, it will execute the flow that is meant there, and it will return the result to the gateway. The gateway is what I will be communicating with the client. The client being my trading PC in this case. So I have a native app that I have coded to communicate with the gateway. Okay, so client will be my PC here. Why I do it on AWS is because before I used to do this on my PC, but then the problem that comes with my PC is that once you have so many systems running, it just leads into clogging of the memory. And AWS is actually a cheaper alternative. You get a lot of things free. So even in data, you will have some free packages. So currently, I think I spend around only $60 on a bill on an AWS per month. So given the fact, even though I'm using so much compute, since most of it is free for individuals. So this is a simple view of it. I have more things related to the gateway. So for few trading systems, I will be tracking result data also in AWS, but that will not be for all. Like only the ones I mentioned, which have 90 to 85 to 90% success rate. From this gateway, I will also have a EC2 bucket running. Okay, and this is just a EC2 bucket means just a server, which basically processes and monitors my trading systems. So if a Lambda function is executed, which is a trading system I want to track, that will be decided by the request. When it returns to the gateway will update the data to my EC2 bucket, which will in turn save it into my monitoring database. And from there, I can like automatically collect details as to how many times the system executed, what was the how many times the system executed, what was the result, and everything I can compute easily. So that other part, I'm actually currently what I'm working on is I want this to be a UI for myself. So right now I have to go into the database and check the values myself, but I'm currently building a UI, native UI that I can use to just see the database in my local PC itself. So this is something I'm working on currently in my free time. Again, a lot of this I want to make it open source, but the code actually, since it's only written for me, as a programmer, it just doesn't feel good to open source code that is bad. So I'm actually cleaning up code for some areas, making it abstract, and slowly, like this year, I plan to actually release some of it as open source, so other people can also benefit from this. Yeah, it's pretty simple actually. There's nothing much to it. It's just Lambda functions in the end. Is this
So
clear?
the programming is done in the Python or something native to the Lambda? I haven't worked on
No.
Lambda before.
Yeah. Lambda is just a concept of AWS. It's nothing specific. Okay. It's just, yeah. So I use Python and Java. Okay.
Python and Java.
So yeah, Python, I'm actually, I don't like to use Python, but Python I am dependent on because of data scraping. So just too many good things exist on it right now for Indian markets also. Okay. Like Jugaad Trader, for example. So, but that I've already almost phased out anyways. So those reasons I'll use Python. For proper calculations, for doing deep like just back testing and all, where I don't need to rely on anyone else but just my data, I'll be using Java, primarily because I'm very good in Java compared to Python, so it's just easier to write for me. These databases are pure SQL databases, if anybody cares about that, just to tell. Okay, because a lot of querying is there, so SQL is best here.
And this data resides on the AWS as well?
Yes. This is also so there's an AWS service for hosting SQL database also.
Oh, okay.
Yeah. So AWS is basically a lot of small services that you can use to group together and make your own cloud in their account. So Lambda functions are basically individual services. SQL is there. This server is also individual. This monitoring database is also a SQL server.
Okay. For backtesting, the data that you mentioned, 6-month, 12-month, how do you get that?
I actually scraped it out of Zerodha. I wrote a Python script. I loaded the data in my UI. and I scrape the inspect element data out of it. How to like, for example, I'll show you here. So for example, that's, I told you, right, a lot of these things are just built for me, so I will actually not care about code quality that much. Why can't I right click here? um, 1 second. Oh, it's trading view has it disabled, but in Zerodha, you can actually inspect element the page. So what I will be doing is, so all that, similarly, this page here, right, will have a code here for that page. Okay, and all these bars here, these values will be stored in that code. So I will just scrape. I use a Python script to scrape it off and just store it in my data. It's a one-time operation, right? So once I write that, like it was just like a 2-day job to scrape it. Actually, once you realize you like it'll go like this basically for non-coding people here, and at the end of it will be data. So once you realize that path, it takes like around 20 minutes to test and write that script, and then you just need to. I'll take it to an Excel sheet. Once I get it to an Excel sheet, I'll write code to transfer it to a SQL database.
I think Jugaad Trader has an API, new API. He just launched it,
Yeah,
I
see,
guess, 8 days
I guess
ago.
even multiple things were there
Yeah.
at that time. I will do a small task
Got it,
like this
got it.
actually to train myself, right?
Got
So
it.
yeah, so a lot of things I'll do myself, even those but for example, indicators I won't do myself. Okay, so if I
Mm.
want to use an indicator in code, I will use a library because they are much more capable of, a lot of research has went behind that library. But Jugaad Trader actually I was not much happy with. So another reason why I didn't use it. And this was something I wanted to do anyways. So I wanted to have a script ready for scraping Zerodha. So yeah, that's how I got the data. Currently working on the 2 years data right now. So a question here that comes is how to get the time frame for that data. Like, so for example, if I'm scraping from Zerodha, am I scraping 5 minute, 10 minute, and like 1 hour data like that? Or like am I doing some magic behind the scenes here? Like, so I actually am to save costs. Instead of my first plan was to scrape hourly data, daily data, and everything. But then I actually ended up scraping just 1 minute data, and I built a logic to convert it into 1 minute data into 1 hour data, 1 minute data into 1 day data. So again, just to improve my programming skills more. These kind of activities help you, become a better coder in general. So since you're also trying to minimize costs, if you write bad code for all these things, your AWS bill will increase because they measure by how long it takes for your code to execute, how much resources it takes. So algo trading in the end becomes all about balancing your cost in the server with your profits here. Any other questions?
So I understood the non-coding bits of the session. Like I understood the system you've built and all that, but I cannot still understand how I can get to the point where I can start developing something like this.
I would
Like,
say, do you have a coding background, or like,
no,
are you fresh into coding?
not at all. I'm not talking about the coding parts of it because I don't know anything about coding. I'm just talking about like the thought process behind developing your own trading system.
Uh, just try to elaborate more, right? Like, you're having a problem starting a trading system. Like, where to start?
Yeah, right, like what it seems to me is that it requires quite a bit of experience, right, to understand what to look for in the first place in order to start building something like this.
That is entirely correct, and that's what I said. Like, if you actually start going down this path, for the first year, you can totally expect that you will actually not end up making an intraday trade, like until
Okay,
unless you're willing to risk that money, right? So for the like when I built my first trading system, I had the discipline to actually paper trade that system first, because of course I'm not crazy
right.
enough to like put money on like what I've written for the first time, right? So I paper traded for a while, and then when I grew confident in it, I started putting money in it, because the first and foremost thing about a trading system is it's a probability game. You will never build a trading system that will have 100%. So
Hmm.
if let's say you have a trading system at 80%, you need to execute it 5 times at least, right? For to have a decent chance at profit. Like even 5 is less, I would say. You need
Right.
to have it repeat 10 to 15 times to make sure that you have profit in that trading system. So for that, you need to have real confidence in going in. So it will take time, but this is like an exponential rewarding path, algo trading, right? So once you
Right.
start, you won't do anything for a year and a half, but second, third year you will start. And if you do, you can also do it fast. I'm just giving my timeline. Second year, third year, you will like start making more money, and like before you know it, like fourth, fifth year, you'll be full time deployed, and like you'll be managing multiple systems. I had a head start in this because I'm from a coding background. So I actually had a lot of things. I've been doing a lot of things before I started algo trading exactly. So all this scraping and all I've been doing for a long while back. But I
All
started
right.
deploying systems by code only a year back. Yeah.
Okay, thanks.
Anyone else? Okay. So actually, if people are interested, I can explore more on two aspects here. If you want, I can trade another trading system. Now, since I was able to clear a lot of theory today. So the next, if I take another session, maybe in the future, I can focus solely on a much more realistic trading system. So what I chose today was an example trading system. You can say, okay, if you, basically what I mean is that you can't get the probability of it about 90% before actually making it and keeping it simple, 85 to 90. So I can take another session on a trading system like that, try to build something which is much more strong and strengthened, and I can show backtesting examples also in that, like show you live how I'm backtesting, how I'm entering values into the code, and how it is giving me the result. Like today I had to give you values that I've already generated. And second part of it is, like, if you guys are actually interested in doing algo trading, then I can take some sessions into setting up some code, like how your code should be structured, how you're supposed to use indicators, like like basically coding lessons there about it. So how to host it and all that. So let me know how you guys want it, and I will prepare accordingly, and we can probably go ahead. Okay.
Okay,
Definitely.
thank you. One final question here from my side. So, this is a system, and it's good. I mean, as long as it's working. So, I want to ask that how much of stop loss you keep in a system?
That's the execution part, right? So this
Yeah.
one, the system I explained here, doesn't have a stop loss. But usually stop loss will come through some other, like as a part of the days you chose, right? You will see, like when you backtest, you will also see like what was the worst days that happened and where did they end. Okay, so for example, for this one, we had four red indicators in the first one, right? Where it was a gap up and it ended low. So what be doing is I'll be going back and analyzing those 4 days, okay, and seeing how those days perform, and then I will like decide a stop loss based on that. So for that's what. So for my trading systems, which I'm trading myself, a lot of them will not have a stop loss right now. So since they're just new trading systems, so I will be trading them manually instead of automating them in code. If you have a stop loss, actually that trading system is like, you should actually just sit down and just focus on the trading system, because that trading system is fully complete and it takes a lot of effort to reach
Mhm.
that third part. A lot of trading systems you make will only reach the two part, and that is also okay. So sometimes I won't hunt for stop loss, but if it is there, I will look on the days when the system was there and it didn't work out, and I will choose something just below that.
So, as of now, you mentioned that you don't keep stop loss. Then, what happens if the position goes in a different direction that you intend? So, does the
Then I will
system take
be
care of itself, or you have to
no.
manually intervene
if
it?
if if the system is not with a stop loss, then I would be manually checking that trade, right? So
Okay.
I will have a stop loss in mind based on the previous market sentiments and basically trade particular, right? So if it is basically, let's say, trading a stock that I'm okay with, I will probably spend a little bit longer for rebound out. If the like I'll just do price action there basically. But
Okay.
mostly I will try to avoid that. That is only when, like, let's say a trading system is giving me 85% of success, but it doesn't have a stop loss yet. So it doesn't have the third part yet. So in that case, I will start trading that trading system manually, right, till I build that stop
Okay.
loss. But if it is
Okay.
like something like 65, 75, I won't trade it at all. Okay.
Okay. So,
Yeah.
are you like a full-time trader, or this is like a side hustle at the moment, and you're still
It's
working with a job?
I am working, but as mostly as like just an advisor to a company. So I'm not working full time there. So, but that is also just for programming. I'll just architect some, I'll just be an architect there for code that is that they're having. Okay, it's actually like I think I doxed myself on this session as someone told. So it's actually a farm company only where I'm like consulting as an architect right now. So, but mostly I'll be spending time on this only nowadays. So for the past 6 months, this has been like most of my work.
Okay, great.
Mm.
Good to know.
So there were a few of the backtester that I saw on the web, and
Mhm.
I was just doing it yesterday. I was finding them out. There's one backtesting.py as well. So
Okay,
and the
I
backtrader also. Huh.
yeah. So there will be multiple methods, right? So you have to decide on like these are just methods, right? In the end, you can even pay someone
Definitely.
to backtest, right? You can even pay someone to backtest it for you. So you just have to pick one to achieve at the end goal. So you can go through whatever you need and just decide accordingly.
Your code is मतलब proper structured in मतलब classes and objects wise, or you just write it पूरा
It
randomly
depends.
just do anything for it.
Some parts are like
Hmm.
which are very high impact parts, like backtesting. There'll be some design there. Okay, but like
Uh,
parts like scraping and all will be like one time use. I won't care much. But like backtesting, I want to make modifications in future, so it will be
yeah.
scalable code. It will have some architecture in it. So
Mm-hmm.
if actually, for as I told right, I took Backtrader only as a fork, so you can actually see Backtrader. So I didn't build it from scratch. So I took Backtrader. I removed the part of dealing with. They have some sync with some ticking website. Okay, so I removed that syncing part. I decoupled their modules. Backtrader is actually one of the reasons I chose it because it's very decoupled already. I decoupled multiple parts of it where they're running the strategy through. I added whatever I wanted to add, and I launched it as a Lambda function there. So on like on an abstract way, in a very layman way, this is what I did. But layer nitty-gritties are there in that.
Mm, yeah, got it. Thank you. Love to have a session again with you next time.
Yeah, yeah. So that's what. Let me know which stream you want to follow. Okay, is it the coding part? Is it like more depth into building trading systems? And accordingly, we can decide on more sessions. Okay.
Sure.
Okay, one more question. In your
Yeah.
trading systems, do you only use like charts and indicators, or do you also use like OI data, FNO breakup, and stuff like that?
I will actually not use OI data much because, as I told you, I will not be trading. I will be doing directional trades only for intraday. So
Okay.
for that, actually, I don't. I will use it to finalize my strategy sometime. Okay, like for example, if I'm buying a call spread, which calls to actually take, right, and all that. But that is something that I don't actually pay much attention to because if you have a good trading system, uh, I just feel like those are for like very short term trades. If I told you that intraday I'll be doing max one trade a day, right? So I will be trying to minimize risk there and maximize profit. So if I'm sure of the direction, I'll just take a liquid option, a spread on that. I'd probably hedge it if I'm not sure, and then go ahead. That's the other one saying that part. If you want to go in deep into, right, it'll become another session of its own. Like what to do after you have direction. So yeah, that is also actually one thing that if you want, I can take. Like if you have a training system, it is giving signal. Now what to do with it? Like so, but I didn't take it because from the mentorship I saw, people are already covering a lot of that. So I
Right.
decided to take something into directional, like predicting the direction instead.
Right. Okay.
Yeah, if that's it, then I think we can close for the day because I only had time till 20 to 30 today and sorry, 20 to 15. So I don't think I can add anything new in 15 minutes.
Thank you very much for the session.
Okay, thank you.
Yeah. Thanks a lot. We'd love to have another.
Yeah.